What's up investors, Ben here and welcome to Motivation to Invest. The electric vehicle market is booming and so are their stocks. From Tesla to NIO to Workhorse, there's so much momentum behind these stocks right now. And even all the hot new IPOs, from Romeo Systems to Arrival. These companies are transforming the EV industry. And that makes complete sense. According to Markets research, the electric vehicle industry is expected to grow at a compounding annual growth rate of over 21% per year. So currently on the road, we see approximately 3 million EVs, and by 2030, that number is expected to rise to nearly 27 million electric vehicles. But there's a major problem holding all these EVs back, and that is the availability of charging stations. So according to Markets, the electric vehicle charging stations market is projected to reach $27.7 billion by 2027 from an estimated $2.5 billion in 2019. That's a compound annual growth rate of 34.7% during the forecast period. So when there's a gold rush, why not sell shovels? It's difficult to judge who will win the EV battle. Will it be Tesla? Will it be NIO? Will Rivian take market share? Will Workhorse come up with something crazy? We just don't know. But what we can do is invest into a company which benefits whoever wins the EV race. Now this brings me neatly to a hot new IPO, and that is ChargePoint. So ChargePoint supplies charging points for electric vehicles. Now ChargePoint has a massive range of Fortune 500 customers, from Facebook to Netflix, 3M, IKEA and more. They even state their total addressable market is anywhere where you park your car. So this could be work, this could be home, this could be in leisure facilities. Wherever you park your car, you're going to want to charge it. So in this video, I'm going to deep dive into the positives of ChargePoint, but I'm also going to cover two major issues which I spotted. Now these are major issues you need to be aware of before even thinking about investing into ChargePoint, because I can see a lot of people losing a lot of money right now. Before we get started guys, if you appreciate valuable videos like this, please give the video an early thumbs up. That helps out tremendously with the YouTube AI. And if you're new around here, why not join the community by hitting that subscribe button and turning that notification bell on. That way you'll get notified when I'm releasing new investment tips and exclusive stock picks, which I'm personally investing into. That being said, let's dive in. Coming in, flex, I just want to win. Now ChargePoint has been requested on this channel for a while now, and I'm finally covering it for you guys. Now let's go over a few of the advantages of ChargePoint before I get into these major red flags. So ChargePoint doesn't just sell the charging points, they sell recurring software and services. If you've ever read any investment book by Peter Lynch, the great investor who beat the market multiple years, he loves businesses with recurring revenue, also businesses with high switching costs. ChargePoint ticks both these boxes. So on the commercial product side, they sell the charging stations, they sell software as a subscription service, a little bit like Netflix, they sell annual subscription service for parts and labor warranties. For their fleet products, you've got the charging stations, you've got the SaaS annual subscription, software as a service also. You've got vehicle scheduling and fueling optimization subscriptions. So let's say a company like UPS hires ChargePoint to power all their EVs in their depot. When people are changing shifts on their deliveries, they can time their shifts so they know their vehicles will be charged at the right time for the new shift. And that is what you can do with ChargePoint's clever software. They also have energy management subscriptions and even professional services for design, build and construction. So I know Shell, the major oil giant, is actually investing heavily into installing charging infrastructure across all its gasoline stations across the world. Now that's a major engineering challenge. So rather than Shell, who's got a specialism in drilling oil from the ground, trying to create this system from scratch, they could simply hire ChargePoint. And then you've got residential products. So once everybody is driving electric vehicles, which from all the forecasts does seem like it will be very likely, at least in the next 10 to 15 years, then you're going to want a good charging point at your home. So they have residential products. You've got the ChargePoint Home Charge sold with lifetime subscription. You've got utility plans for managing your home. And you've also got multi-family charging solutions and even apartment block charging solutions. So 62% of the Fortune top 50 currently use ChargePoint. I mentioned this statistic earlier. And they've also got a fantastic app where you can just click the app, you click ChargePoint app and it will route you to the closest ChargePoint. So this is their winning formula. They've got the hardware, they've got the software, and they've got the services. They've got this recurring revenue and they've got this high switching cost for customers. Let's say you've hired ChargePoint to install a range of charging stations at your business. Even if they're charging you quite high labor costs and service costs, etc., it's going to be very time consuming, difficult and expensive for you to switch to a different provider. So that gives ChargePoint a competitive advantage and allows them to continually raise their prices. Of course, as long as their prices are still reasonable. ChargePoint also has a partnership with Apple CarPlay, so we know this is in many vehicles now, and they have the ChargePoint app directly installed into the Apple CarPlay system. And then there's branding. Companies can also advertise on their charging stations and even put their own branding and logos. But there's more great news. So they've had proven account expansion. So with any business, what you want to be looking for is your customers are continually spending more and more and more and more with you. And that is a great sign to see from any business. It means the revenue can continually compound just from your existing customers. And ChargePoint ticks that box. So proven account expansion, Fortune 50 companies annual spend. So they've over 5 times their spending over the past 4 years with the business. And then you've got the Fortune 500 companies with their annual spending has increased by over 24 times. So that is incredible also. With their top 25 customers, that's increased over 14 times between Q1 and Q2 of the first year with the business. Customer expansion reflects ongoing software and warranty subscriptions, as well as increased hardware purchases as EV penetration grows. So they get 50% of their revenue upfront to install the system, and then they get 36% of their revenue in recurring, and then they get 13% on their ASOR revenue. So it's a real winning combination for this company. So now you're thinking, Ben, this company sounds incredible. They're about to have an IPO. What's these major red flags which you speak of? Well, let me enlighten you guys. So firstly, let's go into the minor red flag. So firstly, we can see here, they have a market share of charging 7 times their closest competitor, 73%. That's not exactly true. You've always got to be careful with businesses on their investor presentation, because sometimes they can exclude certain information. Firstly, Tesla's not even included on there. That's the first issue. Second, this is only networked L2 charging. Now, I do have a background as an electrical engineer, and I know that networked L2 charging is usually the slower version. There's faster versions of charging, and I'm going to show you a graph with that right now. So if you check out this graph here, this shows both the level 2 charging, DCFS connections. That's the faster charging, that's the superchargers. As we progress into the future, people will want faster and faster charging. As people are just impatient, they haven't got time to wait around for hours and hours and hours to charge their EV. They want the quick, fast superchargers. So this is where ChargePoint falls down. So they do have the largest market share. So I do like to invest in market leaders in businesses. They do have the largest market share in level 2 charging. 25,746 connections all over the world. However, in terms of DCFS connections, the fast charging, they only have 618. Tesla, on the other hand, in terms of the fast charging, and we've seen this with the Tesla superchargers, they have 5,667 superchargers. So Tesla is way ahead of them when it comes to the supercharging system. So that could be an issue into the future. Maybe that'll end up costing their customers more because they'll have to change their current charging system over to the super fast charging system. So the company may actually be able to turn this into a win, but it definitely must be stated that it was missed off that entire presentation. So that's the first red flag for you guys. But this is nowhere near a problem when you look at the second red flag. ChargePoint is making their IPO via a Spac merger. So Spac is a special purpose acquisition company, and the idea is to give businesses a shortcut to the public markets. They're actually doing a merger with a company called Switchback Energy Acquisition, SBE. And I know many of you guys have already invested into SBE, so many people have been quite smart. They thought to themselves, okay, I'm not going to wait for the IPO. I'm going to just invest into the acquisition company, and then I'm getting into the stock pre-IPO. All sounds amazing. And yes, that system does work with other businesses. It has its own risks. For example, if the merger doesn't go through, you could lose all your money. So that is a major risk there. But that's not the risk I'm talking about in this video. There's a more blatant risk, which I can't see anybody talking about. So Switchback announced on September 24th that it's merging with ChargePoint in an enterprise value deal that is valued at $2.4 billion. However, if you check out this detailed transaction overview here, we can see that if you've invested into Switchback, you're only getting 10.3% of the total pie when the new stock IPOs. Now that means however much you're investing now, you're only getting 10% of the final company. Now that may be fine if the valuation is great at the moment, but the valuation is sky high. So the existing ChargePoint shareholders will get 80.4% final company, PIPE investors 7.4%, founders shares 2%, so the SBE investors only get 10.3%. So if you look at the share price here for Switchback, we can see it was $10 per share, August 28. So let's say you got in at this point, then you still might have a great deal even if you're only getting 10% of the final company by 152%. Is it still a good deal? Personally, I don't think so. This market cap of Switchback Energy is $1.95 billion now. 10% of ChargePoint is worth $1.95 billion. So call that $2 billion. 10% of ChargePoint is worth $2 billion. So that means 100% of ChargePoint is worth $20 billion. I know you think that's high, and it is high. The revenue in 2020 is only $135 million, which is not very high at all. Gross profit, $33 million. Operating expenses, $140 million. Adjusted EBIT, negative $97 million. So the company's not profitable. You could expect that from a fast-growing company which is expanding. Let's extrapolate these numbers out. Year-on-year growth, they're expecting 46% by 2022. 75% by 2023, 74% by 2024, 63%. Personally, I think these numbers are quite high, given that the EV market is growing at around 30% per year, not 60 and 70%. Firstly, I say those numbers are a little bit charged up. But let's say, for all intents and purposes, ChargePoint is correct with their prediction, revenue of $2 billion by 2026. So if the company is currently valued at $20 billion, if you're investing through Switchback, not if you're investing into the individual IPO, it hasn't IPO'd yet, we don't know the final value of that company, then you're effectively paying at this stage 10 times the company's sales. So you're paying a price to sales of 10, but that's based on 6 years down the line what could happen. So you're not basing it on the current company's cash flow. So that makes it a lot riskier as an investment, because it might not achieve these numbers at all. If it, for example, let's say it achieves half of that, let's say it achieves $1 billion in revenue by 2026, then you're paying 20 times the company's sales. That's a price of sales of 20. However, they do expect to become EBITDA positive by 2025, so that's $86 million. So they expect the completed transaction to fully fund the business model through to cash flow positive. Because the alternative is, if this transaction doesn't fund the business model up until that point, they'll have to dilute more shares and dilute you guys, the shareholders. What am I personally doing? Well, I'm personally torn. I think the company is a fantastic company. I love their business model. I love the industry. I love the tailwinds behind this business. I love the fact that it's got recurring revenue. It's got high switching costs. And also, I didn't mention this, but they've also got a very strong balance sheet. So there's a lot of positives for this company. But the main issue is just the valuation. But in the words of the great Warren Buffett, a great business is not always a great investment if the valuation is not good. And that's exactly what we're seeing here. Like, the company's not IPO'd yet. The Switchback acquisition company will only make up 10% of this business. So I do think that's heavily charged up and a major warning sign I think you guys should all be aware of. So personally, I'm not investing at this time. But that doesn't mean I'm not investing in the future. No stock keeps going up in a straight line, and I'm going to wait for a major pullback on this stock. If it doesn't come, it doesn't come. There's plenty of more stocks out there. I do get into Switchback, let's say. I'll be looking for an entry point between maybe $10, $15 a share maximum. That's when I consider the stock to still be highly valued, but a little bit more reasonable. But let me know your thoughts, guys. If you took the plunge, if you invested into Switchback, I'd love to hear your thoughts. And what do you think of ChargePoint stock? I'd love to hear your thoughts, guys, so please do comment those in the description below, and the whole Motivation to Invest community will join in. And if you guys found some value in this video, feel free to give it a big thumbs up. That helps out tremendously with the YouTube AI. And if you're new around here and you still haven't subscribed yet, what are you waiting for? Hit that subscribe button, turn that notification bell on. And with that being said, I hope you guys have a fantastic day, and I'll see you in my next video. Invest safe.